the Hong Kong government is to invest $3.5 billion in Cathay Pacific to help bail out the embattled flag carrier. And it's the first time the city's government has directly injected money into a private company. The investment will give it a 6% stake in the airline, but the city's financial secretary says there are no plans to get involved in the company's operations.
Government's decision to invest in Cathay Pacific Airways Limited through the Land Fund. The objective is to help protect Hong Kong's role as a leading international aviation hub in this region, as well as the long-term overall economic development of Hong Kong, while generating a reasonable return for the government.
The move represents a large chunk of the $5 billion recapitalisation plan unveiled by Cathay Pacific. The carrier aims to raise the remaining $1.5 billion through a rights issue.
According to One Daily, SEMP quoting sources, Cathay had tried to secure loans from private equity market, but could not get bidders given the political sensitivity surrounding the ownership of Cathay Pacific. Financial Secretary, the government needed to step in because Cathay is the city's most important airline and is a key driver to Hong Kong's status as an aviation hub, playing a important strategic role. So the bailout is, in effect, in overall interest of Hong Kong. The government will offer a bailout package worth $3.5 billion in the form of a loan to be paid back in the future, and also it will take a stake in the airline without seeking full boardroom status. The government says it will lend $1 billion to Cathay in the form of a bridging loan, and on top of that it will be buying preferential shares, that's equity shares, with limited voting rights worth some $2.5 billion, as well as warrants up to $250 million to be purchased at a later date. A new entity called Aviation 2020 will be created by the government to manage this deal, which will give the government, in effect, a 6% stake in Cathay Pacific going forward. Now, Cathay Chairman Patrick Healy said in a statement that they are grateful to the government support, which allows the airline to maintain its operations and to continue to contribute to Hong Kong's international aviation hub status. At the same time, Cathay Pacific itself, it's also raising $1.5 billion from existing shareholders in a rights issue. Now, for every 11 Cathay shares out there, shareholders are required to buy 7 rights shares at a subscription price of 468 Hong Kong dollars a piece. That's about half of Cathay shares' closing price of 881 on Monday. All major stakeholders have already agreed to top up their holdings. That will mean that their stakes will be diluted. Parent company Cathay Pacific from 45% to 42.2%. Air China from nearly 30% to 28%. And Qatar Airways will now hold 9.4%.